Hi there. In this Sage Business Cloud accounting video, we're going to quickly look at multiple currencies. So I'm going to choose settings, and we have currencies here. I'll choose enable foreign currency transactions, and I'll choose a bank charges account. I have one already set up, and I'll leave these two at default. So these accounts will get populated when we create the transactions that require them. And I'll choose save. I'm going to quickly create a US dollar bank account. So I'll choose banking. New bank account. Account type, I'll make it checking, and I'll say US dollars. Currency US dollars, and save. Now I'll quickly do a transfer into this US dollar account, so I'll just choose the account. New entry, transfer. I'll transfer from my checking to my account, US dollar account that is. I'll transfer 2,500. And I'm just going to leave the exchange rate as it is. This is today's exchange rate at this date. But if you have a different exchange rate, if you're entering this transaction on a day other than the day that you're presently at, the session date that is, you would go find that exchange rate and enter it there. And I'll choose save. And you see that 1985.29 USD got transferred into that account. So everything's converted into our home currency, which in my case is Canadian dollars. I'm going to quickly add a vendor, US vendor. And I'm going to choose US, and they're in California. And I'm going to add, I always add the my shipping expense company for the default for vendors. You'll see why in a minute. So I'll pick that up. I believe it's $51.50 for this. Yeah, freight expense. Now to add the currency to this vendor, we chose a country, but the currency doesn't get added until we choose defaults and then currency. I'll quickly purchase something from this vendor. I'll use today's date, and I'll buy 8 105s. And the price gets converted as per this exchange rate, which is today's, which is fine for me. And the depending on the vendor and your shipper, you generally will, the taxes will be exempt. And I'll also add freight. So that is $45 for freight, and that's also exempt. So you see that those amounts get converted into our home currency again, which is my case. In my case, is Canadian. I'll choose save. And I'll quickly receive or pay that amount. So I'll record the payment for it. I'm paying it at the same time as purchase, so I'm just going to leave the date. I don't have to change the exchange rate, again, because that's today. And I'll choose paid from my US dollar account. Check and record. So I have to write out the check manually, so I'd have a book of checks for that account, and I would look at the checkbook, I'd get the check number from that and write those out manually, or however I do it. Now if you look, again, if I look back at my reporting here, I'll look at my trial balance. We had some 9,000 accounts that were handling the currency exchange gain and loss. So you notice those accounts haven't been affected yet. I purchased at one exchange rate and I paid at that very same exchange rate on the same day. So in this example, I'm going to quickly sell something to a customer maybe a couple of weeks ago, and then she'll pay today. So the exchange rate will be different. So I'll quickly go to customers. I'll create a new US customer. And again, I'll pick up US. State. They're in Buffalo, New York. And again, I'll pick up that same on the revenue side, the freight expense or shipping expense on the revenue side. So if I charge them freight, I'll already have a line item on the invoice, which we'll see. And again, this does not affect the currency. We have to go to defaults, currency, US dollar, so that exchange rate field pops up on the invoice. So we'll choose sales, invoices, new invoice, Broadway Deco Art. And again, this is going to be 2 weeks ago on the 25th of October. So that's 10, 25, 21. And on that date, the exchange rate was decimal 8085. So you notice this price here will be subject to that rate. And we're selling her, I'll just sell her a couple of 105s. I know we have a few of those. So again, the price gets converted using that exchange rate. And exempt, and we're charging her shipping. Now the reason I add the shipping here as a line item on the invoice is so that I can allocate it to a particular department. So her shipping is $40. Again, taxes exempt. And if I want to allocate, I can allocate to sales for both of those line items. Again, we can't do that with this amount unless we add the shipping in this on this line. So I'll choose save. And then we imagine she comes and she pays this invoice today. So I choose record payment. And it's now the 14th. Pay into the US dollar account and record. So now if I look at my trial balance, you'll see that there's an amount in that currency exchange gain and loss account. So again, that's using multiple currencies. So we turned that feature on, created a bank account, created a customer, a vendor, did a transfer from one bank account to the US dollar account, handled a purchase, a payment, a sale, and a receipt. Thanks so much for watching.